Hello guys. It's me with another trade breakdown. It will be a quick one. Um, as I wrote here that I was confident about this trade. When you gain market experience, market intuition, and market IQ, just know when it's a good day to trade, and I know when the setup is high probable. That's the only thing. Taking only high probability setup. You just know it. You just know it when it's a good day to trade. Okay, let's get to it. The day before we get to our actual trade, this move to the upside, you see, this is Asian high, this one, and Frankfurt open, London open. When London open pushed to the upside, took out this Asian surging, push to the downside, mitigate, then the price kept on creating this internal structure. Break the structure, taking this inducement, pushing to the downside, went on to break this low, took this inducement, push to the upside. See, taking this liquidity and this trader liquidating, breaking retest traders were triggered in, and you see this engulfing, push to the upside, fear of missing out, people are adding their order, and smart man, this is Quasimodo, head and shoulder, adding their orders, then the price dumped. This is a nice setup, but there's no context. You see? Or I wouldn't say there's no context. It's a nice counter trend because this is our inducement. Yeah, this happened before an inducement. This is what, because we saw M15, this could be our inducement, but this low was our major inducement. So this could have been a nice counter trend. Yeah, let's get to our trade. You see, we had this, first things first, context, relative high time frame structure, and relative high time frame inducement. That's what I'm looking for. See, high, low, high, low, high. So you have no inducement. So this is our inducement, and what reinforced the high probability of this trade, the same H1 inducement, it's the previous day low sweep. Let's go. You see, previous day low sweep. previous day low sweep. H1 inducement simultaneously previous day low sweep. This is a nice confluence because a previous day low sweep is a significant liquidity. See, then I waited. By the time the price was around here, yes. Then I waited for the following day. So let's go to M5. Yes, then the price was around here. With a lot of liquidity. There's a lot of liquidity. Oh yeah. Frankfurt opened, pushed to the upside, took out these equal highs. Then break and retest traders are buying above these highs. Then the price pushed to the downside, taking this inducement and taking this downside liquidity. My first entry, I was so confident about this one. My first entry was around here. Yeah, I was triggered by this candlestick, then the price pushed to the upside. Let me see. It went for 1:1. Then the price kept these sellers here pushed to the upside, inducing these sellers to add orders, thus creating this trendline liquidity. You see, then my stop loss was hit. Then the price pushed to the upside, taking out this trendline liquidity, also pushed to the downside, all creating liquidity. These sellers sold here, inviting these buyers to buy, and these buyers were taken out, plus my entry. The price pushed to the upside, inviting more buyers, them taking out, inviting more sellers. Then my entry, second entry, I think which was based on M50. Yes, it was based on M15. The single candle order block. You see, my stop loss was below here. But as the price approached, I put my stop loss below here, 13 pips. Then here London open, sorry, New York open. See, London open here, push to the upside, creating break and retest, manipulate this low. Then then the price accumulated here, then pushed to the upside. So the 9-1 is to 5. Yeah, 1 is to 4 is to 1 is to 4.9. Around roughly 1 is to 5. Yeah, guys, this is a high probability setup, a prime setup. You see, let's revise. We needed our high probability, we needed our structure, our concept. We needed on that our relative high time frame. We need inducement to be taken out, and it was taken out. That inducement was also a previous day low. Then we wait for lower time frame confirmation during London session or New York session. So we wait also for price to develop from that smaller time frame. We took a trade during London, stopped out, took a trade during New York, then it's played out. This is what I'd like to see. Really, when the price, I just know when it's a good day to trade. Being at the right place, at the right time, it's very important, because you can be in the right place but at the wrong time. That's dangerous. What I mean by being in the right place at the right time, first things first, before you are being in that right place at the right time, the right place at the right time at a slower time frame, but that right place at the right time must wait for a higher time frame before you even go looking. Wait for a relative high time frame structure inducement to be taken out. I cannot, I cannot look for buys here because the inducement has not been taken out. Once inducement has been taken out, then I can start looking for trades. That's where being in the right place at the right time, because also these are economic events. I didn't even know these were economic events, but because I had context, I built my case, I have my narrative. You see, I waited. Yeah, guys, hope you'll enjoy this trade. It's one of high probability setups, and I was confident about it. I started to be afraid about the second one as it pushed to the downside, but I was so confident about this setup. You see, and this high, previous day high candle acts as a liquidity. So it's easy. Once the price sweep the previous day, if this candle on daily, this is a previous day low, then the next day the price swept this low, it's much easier to see, okay, fine, the price will continue bullish. Even if the price, let's say, it's pushed to the upside. Yes, this would have been my inducement. Since the price pushed you upside, break the structure, this would have been my inducement. But still, this entry would have been valid because this would have been my previous day low. This would have been my inducement. My inducement was already taken out. Then the price went to my extreme, then swept the previous low, taking liquidity, then closed above. This is also a very high probability setup, even if the price do. Most of the time, most of the cases, this one will seem a bit difficult because after this inducement, you don't know whether to buy. Okay, you will want to buy here. You see, because inducement have been taken. When the price pulls to the upside, sweep this low, you'll be confused. But this is one of my favorites. This one and this one. This one is much easier because the previous day low is also our M15 inducement. So I had case studies like this. Okay, let me show you an example. This one. This is what I was talking about. You see? Let's go to... You see? These are inside bars, but this candlestick. Okay, let's change the color. See? This is a sweep. Let's go to H1. You see? I had my inducement. Let's go to M15. Yeah, M30 is fine. You see? I have my inducement here. You see? But the price, it's not a buying here. This is a high probability point of interest. After this adjustment, I should be looking. It doesn't mean that, yeah, it's a very high probability if it's gonna sweep this previous day low. It's also to see the narrative, the bias that the price, okay, since it is taking the downside liquidity, the previous day lows candle is going to continue to the upside. But it also can take this liquidity, mitigate and continue to the upside. So entries taken here are fine, even if they are lost, then we can take a second entry. You see, this is my, it's a way where it's beautiful if it's gonna sweep, because I see the intent. Okay, find the price is taking liquidity. A lot of people will definitely be selling at this point above. Then you see, this is a break of structure. Break of structure. Same thing here. This is an actual inducement. This is where I'm saying being in the right place at the right time. Actually start looking after I've seen my relative high time frame same price action. I won't even bother looking for trades if my relative high time frame, let's say H1, hasn't taken, like you see. If the price is still above this inducement, if this price is still here, because I don't want, for now, I want to focus on pro trend. I can look for counter trend here, and they will be very high probable because there's liquidity below. But for now, since I'm bullish, I cannot be looking for buys before the price break this inducement. It's much better if it's gonna sweep the previous day low, take my M15 or H1 inducement, then sweep this low. This low is the previous day low. Also, yes, it was a London session low taken out. Then after this break of structure, then I can start looking. See, also this is a Asian low. You see, it's during New York, and I don't know why I don't know whether, yeah, I did look for a trade here, but this is a prime setup actually, but because I think I had a losing streak. So I wasn't trading my plane, I was trading my motions. I was scared to enter, but this is a typical prime setup textbook. You see, this is our single candle block confirmed here. You can buy here, or I didn't take this trade. See, we have this inducement, we have this order flow. You can buy top loss below. My point was to show you what I was talking about. See, this is actual, this is previous day low, this inducement sweep. In this case, we had only this low. Also, it's a previous day low. It's much easier. So yeah guys, hope you enjoyed the video. Cheers.